Sandip Sabharwal as well joins into the show right now. Sandip, hi, afternoon. Just taking a leaf from the commentary coming in from Ltimindtree. Some relief purely because they were jumping up from oversold, numbers and oversold pockets on Infosys and TCS. Do you think IT henceforth will become a very case-by-case story as it was all through 23?
It will be case by case, but with risks also, because many of the mid cap companies have done very well relative to the large cap ones. So any disappointment like we saw in the case of LTIM can lead to significant sell-offs. So expecting positive surprises is tough at this stage. A negative surprise could lead to these kind of sell-offs. Secondly, overall, we will also see that the economic environment and the economic growth in the Western economy is going to slow down. So in a slowing economy, how these companies expect that business will actually pick up next year is very tough for me to understand at least. So I think as we come to the first quarter of next year and as these companies talk of outlook for 2024-25, I would think that there'll be further disappointments and investors need to be ready for that. So any sharp rallies in these IT stocks should be actually used to reduce exposures.
Right. Sandeep, have to be the 80% of the lot to figure out what to do with HDFC Bank now, not just whether to buy it on dips, but whether to completely avoid. I think that's the question for now.
I think for people who are holding the stock, I don't think they should be selling now because the downside could be maybe 10-12% more, not more than that. For people who want to buy, I think there are two things. One, if you get a 10-12% dip, you are very risk averse, you can buy HDFC Bank. I think from those levels, it will become a safer investment. Or you can look at other banks, other stocks, because many of the other banks or other financials will not face the same kind of issues which HDFC Bank is facing today in having to refinance liabilities, facing regulatory issues related to the merger, etc., which could further still impact them for the next 12 to 15 months.
Taken, but the other one which is seeing a bit of a result reaction today is Asian Paints as well. Though the volumes were on the higher side, the street is worried about the increased competition. Listen into the management commentary wherein they are negating all the worries regarding the competition.
I think it might be a good idea to kind of really watch out for a quarter to see in terms of how the overall margins pan out, the overall volatility of the raw materials, and also of the overall competitive activity to kind of take a call in terms of how the margins would have to pan out for future. If you see the construct of the industry, it is also very clear that there is a large potential in terms of the overall economy premium products, which is there to that extent, given the large bottom of the pyramid which we have in our industry, also the unorganized business to that extent. As I see, given the potential which is there, companies will have to grow in the economy segment to kind of see overall good growths happening and good volume growths kind of coming in. So from that point of view, I think the share of luxury premium products would be at a certain level. So I would say that at least till the time people really upgrade to very high levels of luxury and premium products, we would see this kind of a difference there for at least about 1 to 2 years definitely.
Numbers for Tata Communications also for you at the bottom of the screen. It does look like the company has reported a net profit of around 44 crores, but there must be an exceptional item to it. That's what we should wait by for, though the revenues have been closer to around 5,630 thereabouts. But Sandeep, a view on Asian Paints, what do you think explains the kind of move that we are seeing in the stock? And should one really worry about the competition, because the management says that it will take at least 3 to 5 years for the rest of the competition to even come on our anvil?
Oh, first of all, I think we are not talking about normal competition here. It's Grassing who has entered with a 10,000 crore investment in the paint segment. So it's not a small investment. So I think they'll go whole hog into the market in trying to get market share. Now, for a new player, the advantage is that the margins of the incumbents is so high, like operating margins of 20-22%, that even if they want to come in with 5-7% lower margins, pass on more to the distributors, they can do it and still make money. So I think that's the challenge the paint industry faces with the entry of Grasim. So Asian Paints is a great company, but unfortunately, right now the valuations as well as the earning growth picture which will come in because of increased competition just not justify the valuations at which it trades. So my guess is it needs to trend down. We need to see the impact Grasim will make. In my view, they'll make a significant impact. They might not take too much market share immediately, but the pricing in the market will definitely take a hit and hit the margins of the existing players. So Asian Paints, I don't think people should be buying right now. They'll get much better levels at some stage in the future.
So don't be in a hurry to buy the stock of Asian Paints because there could be better levels that might come on that one. In fact, let me go across to Naresh now and ask his view about a couple of these tire stocks. Apollo Tyres is in focus. Incidentally, today, Axis Cap also came out with a note wherein they've upgraded the stock to a buy versus the earlier rating, and they've increased the target price also substantially within the tire space. And you're seeing, of course, an impact on Philips Carbon as well, which is one of those companies which makes the raw material or the material that goes into the tires as well. Castrol India is also higher. JK Tire is up around 5%. Within these entire names which are buzzing around, Naresh, which is the one that you would take as the top bet?
So starting off with Apollo Tyres has been a good stock. It has performed really well. It is already up quite a bit today. So the bet which I would go with is CAT Limited. That's a stock which is yet to make up or very close to the previous all-time highs. And relatively, the stock was 2,000 rupees back in 2017. Today it is at 2,400, 2,500. So that's a stock which still has an upside. And the next one would be JK Tires. And PCBL came out with numbers yesterday, so that's seen a spike up on that, but would wait for a decline on that one closer to 280, 290 levels. So as of now, at current level, CAT looks promising, and then one could look at the other names.
Okay, that's the take coming in on the tire stocks. We'll take a very quick break, but come right back. We'll continue our discussion with our experts. Back with closing trades right here on ET Now. The Nifty is again seeing a bout of recovery coming in, led of course by a TechM, which is holding up 2.5%. There's Axis Bank pulled up about 1.25%. M&M is not doing bad. There's L&T, there's Bharti, and then SBI and Reliance are putting up a decent show, and I say decent only in contrast to where they were in yesterday's trading session. So marginally in the green for both those stocks, but definitely sitting at the day's high so far as well. Sandeep, what's the expectation from Reliance after what it did last week and saw a bout of recovery or pull up since the commentary that was made at the Vibrant Gujarat Summit by Mukesh Ambani? What's the expectation from the earnings?
Earning expectations this time are moderate in terms of expectations from oil to gas business, oil to chemical business, retail, or even telecom. So I think to that extent, this time expectations are not so high. Stock obviously moved after a long period of underperformance. So I think some amount of comeback was expected. Now, the key to watch always in Reliance is the movement of the overall debt and the free cash flows, and that is something which I watch closely and which is important for the stock to actually perform.
That's the expectations from Reliance. We'll get Somit shortly to join us with all those expectations as well. But separately, wanted to flag out Tata Communications. Of course, the earnings were just out. The bottom line was marred by one exceptional item and the 185 crore hit that they have taken. But now there are incremental commentary coming in from the management. They are saying extremely encouraged that Kalera, which was one of the recent acquisition of the company, has turned EBITDA positive in the first quarter itself. They're also talking about how they see multiple levers to maximize value from both the organic as well as inorganic investments. They're saying that Switch and Kalera have created newer avenues for growth and innovation, and they remain confident about the near-term ambitions as far as Tata Communications is concerned, and that stock is now piling onto gains as we speak. Kunal, your view on Tata Communications, and secondly, IEX is the other stock I want to discuss with you. We had seen MCX on account of those overhangs had seen a massive drubbing, but from there that stock has returned 100% already. Do you think a similar trajectory can be there for IEX?
So the only change between MCX and IEX was that MCX was very volatile at 1800 mark. So I remember I think the stock used to go into steep gyrations of 15-20% swings in just a matter of few days. And when the stock, when the news flow started to become positive for MCX, the stock moved out of 2000 levels, then moved towards 3,000 plus mark. There was a different texture of the stock altogether, and that's what we require for stocks when they move from a certain range on the downside towards a much higher range. That they change their beta, they change that high degree of volatility, come back into stable uptrends. That's where trends they tend to last long. But for IEX, that's not the case so far. So even after this last 3-4 months of price recovery from I think 125 to a point when the stock was almost at 170 plus mark, and in this last sudden 3-4 days of sudden sell-off for the stock, it again brings back the same point which the stock has been plagued over the last couple of years, heightened degree of volatility. I think that should settle down for IEX, for the stock to get into recovery and then maybe come back into the 200 to 50 kind of a club. But as of now, I would believe that IEX could remain to be an underperformer. There could be a point where I think closer to 125, 130, the stock may become attractive. So from a trading play, it could be an attractive, but from an investment play, I would still be a bit concerned about the stock's chart patterns as such.
And Tata Communications?
I think it's a classical stock in the making. I think time and again the stock has managed to outperform, moved ahead of the market expectations. There was a point when Tata Communications used to move in its own tangent, above 1500, 1700 plus mark. And then, comes a point when the stock got into a mild correction. But I think at 1750 would be bullish on Tata Communication. Would expect the previous highs to be taken out, which is around the 1800, 1820 mark for Tata Communication.
Right. Sandeep, I know we've discussed HDFC Bank, but purely because you've got Kotak and ICICI Bank slated to deliver their numbers on Saturday, you think sentiment has been hit for private banks and the scope for disappointment could be larger for ICICI Bank and Kotak put together? Because, I mean, year to date, they've also not done pretty much a whole lot.
I won't agree with that. I think because of the fact that expectations were not so high and expectations were not built up by the managements in the last quarter. So HDFC Bank clearly told investors that the margin trajectory could improve, etc. And so some of the comments they made, they couldn't deliver on that. I don't think that's the case with Kotak or ICICI. Of course, Kotak valuations still are high. So to that extent, if there is actually a disappointment, it could lead to a sell-off like HDFC possibly. But I don't personally feel that we'll see any significant disappointment from these two banks.
Kunal, you were making the observation, I think, Monday or maybe last week, that ICICI Bank was looking brittle and, and then, of course, we all know what happened with HDFC Bank. But what's the reading on the charts for ICICI Bank now? Because that's sort of a leadership name within banks, right?
Yeah, so, fortunately, the stock has been, more of a resilient stock, because in the last 2 days when more selling has been inclined towards HDFC Bank, I think there are a few stocks which have been resilient. I think IndusInd Bank, Axis Bank today after that bounce also indicates that there's slight degree of resilience over here. ICICI Bank again hovering on the 980 mark shows that resilience nature for the stock. But that doesn't take away the point that the stock has been a huge underperformer in the last 3-4 months of this market rally from that 18,800 mark on the Nifty. So I think in that context, when we look at the last 3-4 months of chart patterns, ICICI Bank has underperformed. But just because the selling has been more inclined towards HDFC Bank, you're seeing HDFC Bank, ICICI Bank and many of the other private sector banking names, larger cap names, being a lot more resilient. So we'll have to wait out for a point when the selling in HDFC Bank stops out and then see whether ICICI Bank and as well as the other private sector banking names, whether they continue to outperform, lead from the front and recover and come back to maybe 1,000, 1,030 odd mark, for example, for ICICI Bank. If that happens, then there is a clear change of context for the trends, where we are now looking at underperformance being converted into a stronger degree of outperformance. So we'll have to wait out for maybe another week or so.
Okay, let's wait for a week or so, but of course over the weekend we'll get the earnings and that should set the context as well. Time now to slip into a very short break, and thanks Sandip Sabharwal for joining us on the show. But as we do that, listen in also to the take coming in from Sandeep Tandon as to what he's making of the banking sector, because call it a bit fortunately, but they do not have any of the HDFC stocks in their portfolio.
We have a thesis for smaller banks or close to book value will do very well. So RBL Bank or Karnataka Bank, JNK Bank, private sector bank, let's put me. Private sector bank, private sector NBFCs are still in the most admired territory. Some of the consumption names are still in admired territory, not all. Okay, though we are very turning constructive on the consumption as a cycle, they are still in admired territory.